Welcome to everybody. You've got here a distinguished panel of tech enthusiasts and crypto money and digital money experts. Crypto money today, economy is valuated at $1,000 billion. It's a big market, which is which generated a lot of myths and maybe misperception on what is really crypto money and digital currency. And I would like to start the session with Jimmy Nguyen, which is a lawyer and a crypto money expert. And Jimmy, I leave you the floor, and maybe in few words introduce yourself and how can you describe what is crypto money today, what is it for, and the main purpose of cryptocurrency.
Thank you. Hello, my name is Jimmy Nguyen, and I was born in Vietnam but raised in the United States, and now I live a very global life around the world on airplanes. I was a technology lawyer in the US for 21 years, since the beginning of the internet, and I left about 8 years ago my law partnership life, representing big corporates and startups in the US, to get into the Bitcoin and blockchain world starting around 2015. So I've been in the industry full-time at a relatively early stage. I've been CEO of a blockchain and Bitcoin R&D tech company in London, and for the past 5 years, I was president of a chain of Bitcoin. There are now 3 competing chains of Bitcoin, which is a little complicated. One called BSV, which was designed to scale the Bitcoin blockchain larger, bigger capacity for transactions, low fees, fast speed, so it could actually be used for the things Bitcoin was meant to be used for, which is to make internet payments more efficient without intermediaries and the high cost of things like PayPal or credit card processing fees. So I did that and led an entire global growth of Bitcoin and blockchain, including in developing countries. Now I have my own company and a portfolio of business interests across the world where I'm chairman, board member, partner in blockchain, digital asset, metaverse, and one new AI company. In short, what is digital currency? Well, let's start very quickly with Bitcoin. It was the first one that gained any traction. There's been effort since the 1970s and 80s by people in the cryptography and computer science world to create electronic cash, the ability to send money without physical notes and to send money value anywhere in the world that did not involve government fiat-issued currency and did not involve intermediaries like credit card payment processors. Bitcoin birthed in 2009 with a white paper that was published in 2008 under the name Satoshi Nakamoto. Contrary to what people think today, which is that digital currencies, a lot of their advocates are arguing it should be designed to take money out of the control of government or take money out of the control of banks. That was not Bitcoin's first expressed purpose. If you read the white paper, it's very simple. It was trying to solve the problem of how do you send money peer-to-peer, me to Olivier, anywhere in the world, across the internet, without an intermediary in the middle, such as PayPal, Venmo, or whatever else you use, who take a cut of money and slow down the process. So that's all it was designed to do, for me to send money to you anywhere in the world, including in small amounts, and therefore to change how the internet works so that we could have internet services such as a Facebook or a YouTube that do not rely on advertising to us and selling our data, but that where maybe I'm paying for every 10 seconds of a YouTube video I watch in micropayments. Or maybe when I like someone on Facebook or on Instagram and they like me back, I can earn micropayments as opposed to them selling my data for advertising, because the internet doesn't have that mechanism today. So that's what Bitcoin was created to do. Unfortunately, over the years since its journey, we now live in a world with over 25,000 different cryptocurrencies, well over 500 different blockchains, because people figured out, oh, I can make my own Jimmy coin. You can make your own Olivier coin, and it's really easy to get it then listed on a crypto exchange. I keep some of the coins for myself as a founder. The price goes up. I sell out. I don't do anything else, and I'm super rich and I'm done. So the economic greed drove the industry in a way that has understandably caused concern by governments, institutional investors, and real businesses who, because of that, oxygen of all of the let's get rich quick has created a negative reputation of digital currencies. And so my message is there is really good use of digital currency and blockchain that's possible. Make payments more efficient, create a digital ledger for the world that makes data more efficient to use in how we track identity, IoT data, and many other good uses we'll talk about. But at its core purpose, it was just designed to make payments more efficient, peer-to-peer, person-to-person, and therefore especially help developing countries where the payment systems are expensive, where a lot of people do not have access to bank accounts and financial services. In a future where you all have digital asset wallets on your phone, people can access not just payment capabilities, but micro-lending and many other things. So that's how Bitcoin started. And unfortunately, we live in a world with too many darn cryptocurrencies and too many darn blockchains that don't do anything useful.
Thank you, Jimmy, for the great sum up on what is cryptocurrency. I think it's really set up the stage for this conversation today, and I would like to introduce the second speaker, Huda. She's a tech expert and scientist. She came out of the Emirates, and I would like to go back to what Jimmy is saying. What is exactly blockchain? How does it work, and how does this system ensure stability, traceability? Is it certain concerns that we can work over on, for example, this peer-to-peer payment can be also, it's been said also that it can be used for example, for illegal activity. How do you know when you're a government that cryptocurrency is helpful and used in a good way?
So much for this, Olivier. Great question. My name is Huda El-Khazemi. I'm an assistant professor in NYU. I have also a Center for Emerging Technology Research called Emirates. I run a Center for Cybersecurity in NYU. I'm the co-chair for the Global Future Council for Cybersecurity. I have multiple, roles on boards of different companies globally. I'm as well part of different fund of funds that invest in deep tech and emerging technologies. So cryptocurrencies are primary concerns for us. I'm a cryptographer by heart, so I did my PhD in cryptography. And prior to crypto being, that hype, or prior to crypto being utilized in financial systems, and my team, my PhD students, they work on building new crypto primitives that could be used in different financial institutions or healthcare structures and everything else. So starting from your question, Olivier, what is actually a blockchain and how is it utilized within cryptocurrency markets? Just to give you a nutshell crash course approach, it's a structure and a system of a network where we have nodes that would validate financial transactions in a decentralized manner. And this validation process happens through what we call mining process. And the mining process that happens have different networks and structures. We have, of course, proof of concepts, proof of work. It depends on how do you want to do it. And the merit of it is to validate the authenticity of the transaction before you add it to a public ledger. Most of the cryptocurrencies transactions that happen on the network, they are called pseudo-anonymous. So anonymity is a very important, prominent factor, although the crypto protocols that run this, the hashing algorithms or the public key and private key transactions, they are running on a transparency perspective. So if you ultimately looked only on the crypto components or primitives that's being used, you can actually trace back these transactions to the users because this is the merit of the crypto components that are being used. However, the protocol restrictions here that's being used, for example, in Bitcoin, that is built on the assumption of pseudo-anonymous kind of transaction mandates that you can actually identify the transactions, yet you cannot identify the users themselves. This is can be a doorway to multitude of issues. Like you can have transactions that are would contribute to illicit actions like money laundering and that would come as well from illegal actions on the dark web, and you would not be able to trace it back. However, it depends again on the network that utilize the manipulation of this digital coins, because some of the network, like Z-Swift, for example, would allow you to look into specific transaction and trace them back to a specific ledger. So if you tried hard enough, you might be able to trace things back. In terms of risks, you ask about risks here, we are using blockchains or crypto networks that are running cryptocurrencies. They are not bulletproof secure systems. Yes, they are secure, but we in the field of security, we don't believe in 100% security. And they have been historically running through hurdles. So I'm not sure how many of you in the room heard of double spending of the wallets, where users have issued transaction, and then there are double spending of these transactions and wallets. Of course, people have patched that and corrected that on certain wallets. But as well, we had issues on, for example, what do we call it? The 51% as well, the 51% attacks, and that means that 51% of the node in the network can collude together to issue a transaction, even if that transaction was not legalized. So again, this 51 attack has been bounded, has been fixed, and we will continue seeing a few of the other attacks on the sphere as we live, because that's the merit of hacking the environment. And this is why when I sit with the crypto exchange, CEOs of the world, I tend to advise them not to just have their R&D working on the system or the protocols of the crypto components or the cryptocurrencies, but dig deeper actually and look under the hood and try to develop the primitives that are necessary for their own networks. Because unless they do that, then they have no control over the level of attacks that happen. For example, in 2014, and this is a bit of data that I pulled out, MTGOX exchange has been hacked and lost around 50,000 Bitcoins globally, what's worth of 450 million in few seconds. So you need to make sure, as you are dealing with these kind of volume of digital assets globally, that you can control the security parameters that exist. So this is one of the concerns we have. The second concern we have is that we're not dealing with a lightweight environment when it comes to building these digital currencies. So you are standing on amount of huge resource-intensive operations. And these resource-intensive operations come from the fact that the digital algorithms, they're not lightweight in general, and we have produced with the World Economic Forum a digital coalition for cryptocurrencies, an environmental footprint that says that most of those digital currencies consumes over 60% of the unneeded necessary energy consumptions, and we need to bring it down to a lightweight footprint. So we're doing our best to match the promise of ethical and societal value that comes from digital currency. We know that we have 1.7 billion as of the 2020 studies of World Bank, 1.7 billion of unconnected users globally to financial instruments. Out of this 1.7%, 62% they do have access to actually phones and digital devices. So the power that exists here, as Jimmy has said, is how can we make sure that we are building an inclusive, accessible digital financial instrument, but at the same time strong and solid financial instrument that would protect the livelihood of people who are on the platform. Mind you that we have over 24,000 Bitcoin and digital currencies globally. Out of this 24,000, we're only using 9,000 to 10,000 actively, and you only have few of them that are being used on multitudes of platforms. So we have many issues to deal with when we are talking about Bitcoins, stability of the coin, reducing the volatility, de-risking the assets in general are some of the few main concerns that exist.
Thank you Uda, for raising those topics, and I think you gave me the perfect transition to Benjamin to speak about how cryptocurrencies developed, for example, in Africa, where there's a lot of people that don't have access to banking system. Is it used for that purpose? Is it helpful to get people connected to a mean of payments? How do the cryptocurrencies have developed and performed in African countries? Benjamin is coming from Kenya. He's an expert in cryptocurrencies, and I'll leave you the floor to introduce yourself and speak about this topic.
This doesn't seem to be working. Yes. Oh, it's on now. All right, thank you, Olivier. I am chairman of Africa Blockchain Council, which focuses a lot on policy, particularly in the area of digital currencies, central bank digital currencies as well. So we compare policies from one jurisdiction to another to help other regulators as well understand what other countries are already doing with regard to digital currencies, so that they can learn from that and build their own legal frameworks for digital currencies. I'm also Director of Public Policy and Government Affairs for Sub-Saharan Africa at Mohammed and Partners, that is headquartered in Egypt. And in my career, particularly in cryptocurrencies, digital currencies, blockchain, at the start of my career, there were a lot of what we call this term scams. Yeah, there were a lot of activities of fraudulent crypto-related activities in across Africa. From one meetup to another, you'd find halls full of Jimmy has talked about a lot of blockchains, some of which do not really have particular solutions to any kind of problem, but many of them are just tokens, and a lot of activities revolve around them. Early in my career, there were a lot of that, and myself interacting with corporate executives, government agencies, many of them shied away from having these conversations, because of the hype around the speculative aspect, the focus on the speculation, and they were not seeing the substance of it. So I really did coin a term that I call the crypto poison. And in my view, the crypto poison is that we presented the cryptocurrency to these people, to corporate executives, in a way that because corporate executives do not like the term disruption. The term disruption is not for corporate executives, and it's not for many government agencies. So while these technologies, particularly cryptocurrency or blockchain, might be disruptive, many of these government agencies and corporate executives, their focus is to find a solution for their people. So as developers, as enthusiasts, as leaders in the blockchain industry, we really have to understand that that is really the core of what these governments are looking for. It's really not about the technology, it's about the solution. So it doesn't matter how huge or how enormous the technology is, we really need to get a solution out of this. We really need to find a solution that will be relatable to the people. And I'm going to give you 3 examples. In Kenya, for instance, during the COVID-19 lockdowns, a company called Grassroots Economics built a community inclusion currency based on the blockchain called Sarafu. Now, this is how it works. They would go to informal settlements, and they would register a number of users from these informal settlements. And then this Sarafu, it will be equivalent, one Sarafu is equivalent to 1 Kenya shillings. So they will deposit a certain amount of Sarafu as a direct transfer to people in these informal settlements. And within the Sarafu system, network, they would create an economy so that within the Sarafu network, we have suppliers of basic needs, those who are refilling, for instance, cooking gas, those who are selling basic needs, foodstuff and all that, are registered within this network. Now, what would happen is, because this was also done in partnership with, in collaboration with Red Cross. And this is to help people in these informal settlements to be able to access basic needs. So direct transfer, when we do it, for instance, in fiat currency, sometimes these monies are used for purposes that are not, maybe you provide some money for someone, and instead of buying food, they go and buy something that is really not part of the basic need, so it doesn't last them long enough. Yeah. However, sarafu transferred within these wallets could only be used to buy from the vendors within this network. Therefore, these people, they could only consume so much of the basic needs. So this was possible. This helped them, particularly the stakeholders, to be able to transfer monies that is useful to sustain these informal settlers. And you know what? Within 2 years, they had the amount of trade that had been transacted within this platform was as high as $3 million. And this is an informal settlement. I'll give you another example. A company called Machankura, probably some of you have heard of it, and is doing a lot of work in sub-Saharan Africa. They've made it possible for people to be able to transact in Bitcoins, even with feature phones, so that those who do not have smartphones can be able to transact in Bitcoin. And another amazing example is Kotani Pay. It's a Kenyan, founded by a Kenyan friend of mine called Felix. And Kotani Pay really did consider financial inclusion for people sometimes referred to as stateless in policy, or people sometimes referred to as or refugees, or people who do not have identities. Yeah, because for you to be financially included in Kenya, and in many countries, of course, they need to be KYC. You need to produce your ID. What about if you don't have an ID? How do you get financial inclusion? So Kotani Pay makes it possible for people without such KYC documents to be able to access financial inclusion, and again, through the use of shortcuts, which means they can be able to just dial a star XYZ hash and be able to interact with the blockchain without the internet. That way, they can actually on-ramp and off-ramp without the use of internet, and they can get into M-Pesa, which right now in Kenya has a penetration of over 80%. Yeah. So, bottom line of my point is this: in Kenya right now, financial inclusion is over 80%. Mobile money, even it doesn't matter which part of the country you go to, people have access to mobile money, from the young to the old, yeah, from micro and small, medium enterprises. Many of them are accepting M-Pesa as a means of payment. What solution that is different will you be giving to them if you introduce blockchain or cryptocurrencies to them? And this is one of the reasons why the Central Bank of Kenya, since last year, had been exploring what we call the central bank digital currency, which has been introduced in Nigeria, the e-Naira, and it's probably highlighted. The Central Bank of Kenya did actually abandon this project because looking at the local environment, it was clear that we already really have, the financial inclusion levels are really already high. So we have to find a way that whatever technology that we want implemented is actually bringing a solution. Yeah? If you want vendors to accept Bitcoin as a means of payment, how are they going to use Bitcoin after that? So across Africa, if we look at crypto adoption across Africa, most of it right now is seen as an investment rather than as a means of payment. So As an investment, you see, for instance, the United Nations gave some data mid last year, that in Kenya, about 4 million Kenyans out of about 50 million Kenyans had cryptocurrencies and were transacting in cryptocurrencies. Yeah, chain analysis in the report stated that Kenya actually had a lot of transactions leading in Africa with regard to peer-to-peer cryptocurrency transactions. Now, if you look at all this data, yeah, they all revolve around investments. Yeah, so many of these communities do not really care about will I be able to go and pay for my parking with Bitcoin. So I like the solutions that are coming up right now that are now seeking to really increase the adoption. First, by making it possible that I can be able to spend my cryptocurrencies. For instance, using Binance Pay, I can be able to spend my cryptocurrencies, and the vendor can receive the currency that they want. So if I have a crypto card, I can be able to go to a restaurant, pay with my crypto card, but the vendor doesn't know about the crypto. It doesn't care about crypto. So we should ensure that there's the infrastructure, there is the technology, so that those who want to use cryptocurrencies, because financial inclusion doesn't have to be cryptocurrency. There are other means of financial inclusion, yeah, that makes it awesome. So it depends with how we see financial inclusion, and cryptocurrency and blockchain should be part of creating this solution more awesome, and should be part of including those segments that are excluded and that mobile money is not helping, rather than seeking to replace and seeking to overhaul governments from a point of decentralization versus centralization. I don't think that is really the conversation. The conversation should be awesome and harmonious in the sense that we are all looking for solutions, and the governments are here to stay. And centralization in the financial systems will be here for a long time. So we need to find ways of giving what blockchain can give in terms of helping the government and helping institutions achieve their goals. And the concept of central bank digital currencies is one that can help that with that as well, particularly right now with cross-border transactions. So a lot can be said about blockchain and cryptocurrencies, but I insist the focus should be on solutions other than the hype around the whole discussion. Thank you,
Benjamin, for those examples from the ground. And very pragmatic example from what's happening now in Africa. You've been mentioning the example of Nigeria also. Nigeria is one of the most developed market on the African continent in terms of cryptocurrencies. Maybe how you wish to say a word about this. I'll let you introduce yourself. You're an asset manager. You're working also in traditional finance and green bonds, but you're working a lot on cryptocurrencies. What is your perspective on that?
Thank you very much, and I'm happy to be here. My name is Hayo Kunle Olubumi. I work for a company called Augusto & Co., the Pan-African Credit Rating Agency. Like you mentioned, we are primarily into the traditional finance. Of course, when you heard about credit rating, you know that definitely we're talking about the traditional assets. We also into business information providing. So definitely we issue reports looking at various industries and looking at what is happening. And recently we've added green bond verification into our portfolio. As a matter of fact, we are the first company of African origin that was accredited by CBI as a green bond verifier. So however, although we are in the traditional finance space, but based on what is happening in Nigeria, we don't have a choice than to actually venture and even look at what is happening in the crypto space. If you look at Nigeria, we all know that Nigeria is the most populous African country with a huge youth population. Over 70% of Nigerians are actually below the age of 35. And of course, you notice that because of that, you see that the young population is looking at what is the next thing, right? And should I say, fortunately or unfortunately, the regulator does not see crypto as something that needs to be adopted. And I don't blame them, because you agree with me that in life, anything that you don't understand fully, the first thing for you to do is to try and even see how you can push it away. So you notice from the central bank up to the financial market regulator called the SEC in Nigeria actually outlawed crypto. However, about 5 years ago, what we saw the currency devaluation, and we also saw a decline in the inflation, in the interest rates, such that the real interest rate was negative. What happened? So the youths were thinking about what are the assets for them to actually adopt. And we saw a huge spike in the adoption of crypto. I'm sure if you check the adoption rates, you'll notice that Nigeria is actually one of the top 10, right, adoption of crypto. But the irony is that that is actually without the consent, right, of the regulator. We saw a huge adoption of crypto. However, unfortunately, in Nigeria, crypto is still in the stage of being an asset class and not yet a currency. Because if you check most currency, most of them actually move towards this part. Currently, most people investing in crypto, they are investing in it primarily to get a return, right? Not necessarily to use it as a means of exchange or as a means of payment for transactions, right? So that one hasn't gotten up to that particular level. Unfortunately, there was a crash. The crash in the crypto market significantly impacted the adoption and even the embracement of crypto. So a lot of people are actually confused on how do they do with their crypto assets. Having said that, a trend that we are seeing now, although like I said, right, the CBN and even the SEC, they didn't want to hear about crypto. But when they saw that a lot of people were actually adopting crypto, the CBN has to now come about by adopting the central bank's digital currency called the e-naira. Unfortunately, right, the fundamentals of crypto or digital currency was not understood before introducing that particular product, right? So that product wasn't really meeting the expected needs that is meant to meet, right? Other currency, other assets are already meeting it. So you see that the adoption of the e-naira has been significantly low. However, you still see some people adopting crypto. But the trend that we are seeing now in Nigeria is that, look, like Chris mentioned earlier, for crypto, there's more to it. It's not only about the currency. There are a lot of benefits that could actually even be gotten from it, right? The technology behind it. What we are seeing now is that a lot of companies are trying to see how can they use the blockchain and even the technology behind them to actually have efficient payment system. How can they even integrate it and also use it? So in summary, in Nigeria, now they see a huge adoption, but not really as a form of currency, but currently as a digital asset. Unfortunately, right, the volatility has been a significant concern in Nigeria. Thank you.
Thank you very much for that perspective. And I think we are going to go back to that volatility question you raised. I would like to go to another Nigerian panelist, Toyin. You're also a tech expert and very actors in the cryptocurrency sector. What is your perspective on what Ayo just said on Nigeria, on Nigerian case, but also implying what has been said also on financial inclusion? What is your perspective on that?
Thank you very much. It's my pleasure to be here, and I like all that the speakers have said, which are very valid. But I'm going to talk from reality in Nigeria and also from an African perspective to give us an idea. I'm Chief Dr. Toyin Oloniteru, or Justus, if for those who understand English and make it easier with that. I'm a multidisciplinary and interdisciplinary person, a mathematician, statistician, applied economist, law teacher and scholar, public policy expert, and a cyber expert and cryptographer. When we started cryptography from the Royal Holloway University of London, information security groups, even in the United Kingdom, then only the Royal Holloway University of London and University of Oxford is allowed to do doctoral studies in cybersecurity. So I've been very lucky and fortunate to have advanced with developments of the digital world, right from when We have computers that does not have hard disk, where you have to put your operating system, say MS-DOS, on drive A, and the data diskette where you save into in drive B. So at that time, when we are working on the computer, you have to save every 5 minutes, because if they take power, all your work is gone. Along the line, we now have hard disk. So from 5.25 diskette to 3.5 diskette, then that time there was no mouse. So we have to now begin to scroll left, right, up and down until everything changed. Then the eras of internet came about. So I participate in all of this process, and I can use the experience, the historical experience, to do a trend analysis and forecast what is going to happen, which is the reality. For example, in Nigeria, I'm one of the team that set up MTN Nigeria, because you know that Nigeria was very behind when it comes to telecommunication infrastructure. We do not have the landline. We do not have, we have just about 250,000 telephone lines before. But now almost over 80% of Nigerians have access to the telephone. What are the things demographically and other changes that took place then to give us idea of what is going to happen? So having said that on the educational aspect, I'm an entrepreneur, so I'm a scholar practitioner, the president and founder of Crypto Economic Institute of Africa. And a lot is happening, because that is the phase that's supposed to be the foundation, but that we left behind. The educational awareness, skill acquisition, and capacity building aspect of this technological and emerging technology space. For as long as that is missing, then we are going to be solving problems that should die natural death. Because all the things you have said is very correct. How many people ask ourselves, you are talking about financial inclusion, you are talking about blockchain technology, how many people know what private key is? And shouldn't they know? Then you are going to be talking about fraud later, when I cannot even differentiate between a public key and a private key. How many governments, how many people know the difference between, we even have public key infrastructure in place? And you are talking about it because people want to make money. There's nothing bad about that. We've experienced that severally. That is not the issue. The cryptocurrency have come to stay, and there's going to be two monetary order. One for the traditional monetary system and one for the emerging technology, which is the crypto space. The central bank digital currency we are talking about is just an encapsulated digital currencies. Because first we must be able to differentiate between a digital currency, a virtual or electronic money, and a cryptocurrency. Cryptocurrency simply means mathematics money. And everybody needs to understand it from that perspective and be able to explain it in their local dialect to people so that people can understand it. And educationally, as the founder of Crypto Economics of Africa, for now 5 years or 6 years ago, even when the CBN have not aware about it, I have trained my ethnic group in Nigeria on cryptocurrency, which the sub-ethnic group that we call OWO is one association. That means OWO within the sub-Yoruba ethnic group in Southwest Nigeria. I have taught them for 5 months free, so that we know that mathematics, because cryptography is mathematics, the mathematics of hiding information, and currency means money. So that it doesn't look abstract. You must bring this currency to the people. Now, we must be able to understand how will these things be utilized in reality. And that's why I like my friend and colleague here, co-speaker from Kenya, who has given an example of M-Pesa. M-Pesa did not rely on dictates from the Western world, begin to list out issues before introducing M-Pesa. They introduced M-Pesa and it worked because there's a gap. Just like I used the idea of the telephone in Nigeria, there was no telephone, but Nigerians, because everybody needs it. So now, the way they have established that in Africa, one of the use cases in Nigeria is what I myself is bringing into reality. And it's called Toyin Coin, which I'm going to use to solve a socio-cultural challenge in Nigeria. It is part of our culture in Yoruba land in Nigeria, which Ayo can testify to, that when we are doing celebration, when we are doing birthday, we are doing burial ceremony, we are doing any form of graduation ceremony or anything good, we spray money. We spray money. Because we spray money is our culture, it is against Nigerian law to spray the naira. But Nigeria spray naira till tomorrow. Even in UK, in America, they spray money. Because government is trying to engage in regulatory dictatorship by asking people not to spray money. Even before Naira came into existence, they were spending cowries and some things in form of money in Nigeria. That's a problem. So the Toyin coin is meant as a cryptocurrency that will allow us to spray that currency with a paper equivalent. So it's called disposable and redeemable token on the field. So solving a solution so that you cannot be mashing the Naira on the ground when you have an alternative. And that alternative can be used for spending purposes. Because when it's in the community, then if there is no enough Naira, and because they are now used to that currency, they can use it to buy mango, buy tomato, buy things within the local market. And we're going to do it. And by incorporating public policy into it have an issue, whether in form of transition or all over, so that government side is taken care of. So they're going to be the supply side and the demand side taken care of in that part of solutions have an issue to be able to ensure that that is done. Now in Nigeria, we have over 5 million people dealing in cryptocurrency. That's why that the Central Bank of Nigeria is against it. And they are against it for obnoxious reason. Because in Naira, why should I even as sophisticated as I am, I do not get anything involved in the Naira, even though I see my bank account. Why do I need to get Naira? Talk less about somebody who is in the rural area. Because even the traditional currency today is exploiting people. I can keep my money inside my cocoa farm. Nobody will go there and take it. If somebody going to take my money that I kept inside my cocoa farm, I know how to deal with that person in the local way too for going to my farm unauthorized. Whereas the banks, they will dictate money from you, transaction fee, another fee, electronic transfer fee, without even talking to you about how much you do not agree with them, whether it should be 50 Naira or it should be 25 Naira. They decide what they like, and we have food population. That is fraud. That is backed by the regulator. So this is what will make the cryptocurrency to come into reality. And one of the things that I want to point out is that there is only about 21 million bitcoins that we have in mind that the whole world is going to be shared forever. That is why the universal currency for the world is going to be the Bitcoin, where the altcoins, whether they're in 1 billion or whatever, is consequential. We rely on the Bitcoin as for the exchange transaction, just like all the other currencies that are using Naira and $1 today for conversions here and there. So I'm very positive that people are going to adopt it invariably when we start with the education, which will start from primary school, from secondary school, because what I'm worried about is even different from what we that I will call those on the upper echelon or the pyramid are worried about. We are worried about fraud, worried about this and that and all. That's what I'm worried about. In a country like Nigeria now, a lot of people, men, women, they are trading in cryptocurrency. What happens when they die? What about issues, crypto asset inheritance issues, probate registry? So, like people have mentioned about solution. These are the things that will bother us. Because if I have money in an exchange in America or in Singapore, and the person passed on or become incapacitated, how will that money be transferred to the offspring, to the family or the people who own those things, and when the exchange collapse and those in America can recover it? So there are serious issues that we have to deal with, both from the policy and from the operational perspective. And I think that we will get there because, just to summarize it for us to get it clear, what has the government been able to do with email system? Today, we still have the official, like in Nigeria, NIPOS, Nigeria Postal Communication, which is government. But people use Yahoo, people use Gmail, people use their office email, and it's running pari passu with that of the government. So that is what is going to happen between the fiat currency and the cryptocurrency. They are going to work simultaneously, but over time, the cryptocurrencies for the crypto generations will take the place. So this will be my immediate comment now. And thank you very much for your time and all this.
Thank you, Tanger, for raising some practical issues on cryptocurrencies too. I would like to give the floor to Scott. He is coming from the US. Maybe, Scott, you can tell us more about your perspective on what should be the appropriate regulation and what is the social impact of cryptocurrencies from your perspective?
Sure. Is this on? There we go. Well, thank you. And I'm honored to be here. And I appreciate King Mohammed VI and Amadeus Institute for bringing this conference and convening together. This has been the most pragmatic crypto panel that has not talked about crazy NFTs and all sorts of silliness on crypto, but what are the pragmatic uses of crypto? And obviously, as Jimmy sort of started, there's investment side and there's payment side, and solving for payment side is really what a lot of this panel has talked about, and stability. But these issues that were just brought up next to me is really what I want to dig into, which is, of the 24,000 different currencies, this is where it's not like Microsoft or Google, Gmail. These currencies are all very different. I came out of working on Barack Obama's digital campaign back in 2008, where we were early adopters to mobile technology and text messaging. And fast forward, we then watched how text messaging could be used for mobile payment. And I was involved in trying to figure out how could government regulate mobile technology and text messaging for payment. Fast forward to today, it's the same problems with digital currencies, that we have to do something about these 24,000. I would say everybody on this panel have a different agreement on this, but 70%, 80% are vaporware, and our 99.9 is what Jimmy's saying, are just completely fake. The US is guilty of promoting and propping up a lot of these problems. But these problems are worldwide and are hurting real people. You're probably all familiar with the musician, very famous Akon coin. Sorry if any of my colleagues are really familiar with Senegal, where it was a pipe dream of, we're going to make the first digital city. He may be a very, very well-meaning musician who wanted a digital city, but the amount of corruption that was taking place, and also the lack of stability in that currency, is really problematic. As my colleague just said next to me, what if you invested and put your life savings into a currency and then can't pass it on to somebody else? Or what if that currency, you put your life investment into it and it turned into vaporware Akon coin, and now you have no money? These are real problems. As of, I think, yesterday, November 15th, the US government is looking into this with the Financial Service Commission. But now, look, I don't want anybody here to rely on the US government to solve all of the world's problems. That was a joke, laugh. All right, so, right, every country is going to have to be looking into these things in a real way, right? There are 15 different committees in Congress looking into this right now. The latest is this Financial Service Commission. The SEC is looking into a lot of these issues. But the reality is that it's going to be education of end users. So it's great that people are educating end users about adoption and mobile transfer, but there's also this other piece of education that we have to worry about, and that is, what did you buy? It's no longer, I invested in Bitcoin versus Ethereum. Now all of a sudden, I have an opportunity to invest in some coin that I have no idea what it's based on. And so those, to me, are the basic pragmatic issues. So there's a reliability issue, there's a pragmatic usage issue, and then there's the final piece that it was a little bit covered on here, which is the end mile, or the end inch, if you want to talk about, which is I as an American, downloaded Venmo, because I've been using Venmo to transfer money. Venmo all of a sudden offers the ability to buy Bitcoin. Oh, but I can't actually move Bitcoin through my Venmo account. I can buy it and invest in it. Jimmy's shaking his head, so I know I'm doing something right. But I can't actually move it anywhere. That's a problem. Maybe I wasn't trying to invest it. Maybe I didn't have the type of money to invest. And for large portions of underpopulated or underprivileged parts of the world, they're not trying to invest. They're trying to move money very quickly and solve problems. And so these things are really a problem. And then on the nonprofit NGO side, your nonprofit can take Bitcoin, but are you an expert? Do you have anybody in your office that knows about how long you should hold it, how long you should invest in it. Should you invest in it? Right now, I think we're in the infancy stage that NGOs are wanting to take money quickly, so they all want to say that they're cool and hip, and they take cryptocurrency, but they don't know what to do with it. They have no expertise in it. You wouldn't have your NGO take money from a stock portfolio. Is it a good investment or is it a bad investment? When should you sell it? When should you hold it? If your NGO doesn't have any of those expertise, then why are you playing in a world that you have no expertise versus solving the crisis that your NGO was set up for, which is delivering more services to people in need, not pretending that you understand cryptocurrency. So to me, those are just some of the big problems.
Thank you very much for raising the question, and I would like to give the chance to Jimmy to comment on that, because I think you raised the. Now also you are going to comment each one maybe 1 or 2 minutes, and then we open the floor to the public to get some question, because we have 30 minutes, so we can take 10 minutes to comment, and then we leave the floor to the public to have some questions. But I think you raised the question of volatility is one big question raised in terms of investment. Also, there's one question more I'd like to ask, because you know that northern African country, for example, they get all of this regulation on change control, currency change control, and they are very cautiously looking at cryptocurrency as a way to bypass this regulation and to deal internationally, and so the risk is money outflow, where this country needs local investments and national investments. So there's a big concern about that, which is quite linked, I guess, to the actual position, for example, of a country like Kingdom or on Morocco on cryptocurrency. So that might be also a bigger perspective from the countries, from national country. You spoke for the US. Obviously, we are not heading the US to solve all these cryptocurrencies question for all the world. And I think each country has a national point to a national way to engage the question of cryptocurrency. So on all those questions, maybe you could have a word, Jimmy, and then we go back to Dan and so on. We continue the discussion.
So as a former lawyer, I'm often asked by governments to come advise about policy, because they don't actually like most crypto people. Most crypto people are very anti-government, anti-bank, whereas I come at this from a much more corporate experience. I tell them I fully understand all these concerns, but that you should not run away and pretend that cryptocurrency, digital assets, and blockchain are not here. So instead of burying your head in the sand and allowing just a gray market to exist, which is true in many countries such as Nigeria, Pakistan, Vietnam, developing countries where I all do work, they're among the top 10 crypto trading and adoption index countries in the world, but it's all a gray market. So I advise governments to just regulate it, create a comprehensive regulatory scheme, such as Dubai has done with their virtual asset regulatory authority, make clear what licenses are needed by service providers who offer exchange, payment, custody, or other financial services, have identifiable information so that you can track the flow of money when you need to deal with capital flight and other requirements, and that will actually increase the business investment and money into your country. So what I tell them is, I understand why you're scared, but just regulate it, don't run away from it. And here's 4 examples of companies and businesses that I think that they would, that would appeal to their instinct for a simple thing. How do we get more money for our country and for our people and the entrepreneurs? How do we use stable coins and digital assets for that? Minute Money is a company based out of South Africa by friends of mine that uses digital currency, BSV, as the base layer to make remittance across African countries. They go from South Africa to now 8 African countries much faster and cheaper, where they charge a single fee of 50 South African rand, which is about $2.70 US cents, about 27 Moroccan dirham, to send any amount of money. You're not paying 6, 8, 10% of the amount to send money to your family and friends. Just a flat amount of money made more efficient because of digital currency. Takadao is a company based out of Saudi Arabia from a serial entrepreneur. They just got $1.6 million of investment from Tim Draper's investment fund and others. They are using digital currencies and stable coins to create halal alternatives to insurance and savings, because in Islamic finance, you really are not supposed to have the typical type of insurance programs we have in the US. So they've taken the historic practice of takaful and allow people in a community to contribute through cryptocurrency, such as Ethereum or stable coins, to a community pool that is designed to help protect each other in the event of an earthquake damage, in the event of something happening in a car accident. So it's an alternative using digital currency for halal insurance. So they have a savings program as well, which is called Takaturn, where you all put money into a money pot and you get the portion of that money at least once. Also done with digital currencies. Bitlipa is a company of a friend of mine in Kenya that was a digital asset exchange and wallet. It's shifting to be an API provider for financial institutions. It is taking investment money from people, including in the US, in stable coins, using that to create a liquidity pool to provide capital lending to SMEs who cannot get loans or money from banks in Africa, again with stable coins. InvoiceMate, a company out of Dubai that I'm chairman of, is doing something similar. It's creating a bridge between SMEs and now 11 banks, which we've signed partnerships with in Pakistan and the UAE, to power financing marketplaces where they lend money to SMEs on their unpaid invoices. It's called invoice financing or invoice factoring. So they access cash faster, powered by blockchain. In the future, we're going to tokenize that and take money from the crowd, from the public, so that you can help support and finance even a fraction, tiny fraction of an SME's invoice. And finally, there's a company called Paycode in the United Kingdom and in South Africa that I am friends with. They have a technology solution to try to deliver the last mile or the last inch of delivering funds to people in rural areas, especially in African countries, who cannot have internet access or even a smartphone, but you want them to use digital payments. How is that possible? They send young people out with a tablet device to collect ID information about people in rural areas where there may not even be an identity record. They collect biometric information. They hand them a smart card within minutes that has funds on it, and the merchants in the area can then tap the cards to pay. Even if there's not internet connection, at least once a day, their system connects to internet and settles in a big ledger. Right now, they're not using stable coins, but they've approached me to discuss it because a lot of the money that they're sending down to these rural poor areas is social grant money, sometimes in the hundreds of millions of US dollars from United Nations, NGOs, and other organizations who right now are funding it through bank transfers, but love the idea of stablecoin funding because then it's more traceable. They can further assure where the funds are going to. And so that is some examples I give to governments about, instead of being afraid of this world and all these concerns about digital assets and digital currency, which are completely understandable, if you regulate it, companies like this can come into your market and not just generate more investment for your people, but jobs, entrepreneurial opportunities, and actually get money into the hands of your citizens.
Thank you, Jimmy. I guess we get your point. We need to keep it short also to preserve an interaction with the audience. We keep in mind also this question raised by Scott, which is it's a paradox of cryptocurrency because it's supposedly disintermediated economy and market. There's no intermediary, but still there's this big platform which allows you to get your wallet and exchange, and sometimes you can't interact outside the platform. So it's quite paradox because there's new intermediary, in fact. Maybe Uda, some comments on all the discussion?
Yeah, I just want to be very quick about this and maybe echo what my colleagues here just said in the room. Thank you, Scott, for making this kind of a global call to be in control of your own crypto sovereignty. I think it's very important to make sure that we carry out the efforts, the global efforts, because it's decentralized financing system. And the merit of it is to celebrate the lack of central governance, right? And regardless of what we're having at the moment, when you talk about adoption, thank you, Benjamin, and our colleagues from Nigeria for bringing this very insightful perspective, because regardless of what we're saying here, it's an issue of how can we stabilize this new fundamental instrument of financial, assets that are being created. And the effort of stabilization goes across the market by not just, like what Jimmy said, introducing stable coins that are uniquely tied up with maybe commodity, with fiat money, with policies. But what Nigeria is doing and what Kenya is doing is pioneering into the field, because they're trying to create this association in between the value of the cryptocurrencies and as well the local policies that can be established in the market. And yes, this can take a little bit away from the decentralization merit of the whole ecosystem, but it's the tax that we're paying to introduce stabilization into the market. There are other efforts that are happening in terms of stabilizing this currency using algorithmic models and mathematical models, but still it is surrounded by loads of uncertainties that affect the potential growth of similar examples that Jimmy just mentioned, the potential growth of mobility and usability of those assets. I worked with the PIS in Switzerland, and as well with the EU Central Bank and with the World Bank, and making sure that we tighten up the definition of sandboxes that we create globally when we are discussing financial instruments related to cryptos and cryptocurrencies. And we do respect that at the moment, according to the Atlantic Council regulation tracker that they have adopted, we have over 60 countries globally that they're building their own cryptocurrencies jurisdictions. And this kind of lack of, I would say, equal growth in jurisdiction, equal growth in legal jurisdiction, is a limiting factor of how can we use this currency for global international trade. If it's legalized in one country, it's not legalized in another country. If the maturity of regulation here is different than the maturity of regulation in another country. So the harmonization efforts are very much well needed today. I think Nigeria, India, Vietnam are topping the charts when it comes of utilization and adoption of this, because of this kind of efforts that you have on the ground that we don't see in other jurisdictions that are very much mature in building for this global regulations. In UAE, for example, we have different bodies. We have bodies that were established under the IFC in Dubai and under the ADGM in order to regulate digital assets in general, and as well in order to create a sense of security and safety and stability. We have been creating soul-bound assets and others, but this does not promote for adoption. We need more of government interaction and more of like this open pathways of adoption that should be existing on the map. Thank you, Olivier.
I guess we are all interested also on this utilization of crypto technology, like local currencies, like you said, in the way Kenya and Nigeria partly implemented it. So I leave you the floor, Benjamin, to comment on the discussion, on what you can bring about what's been said on regulation, national view, eventually also is this use of crypto like locally to implement social policies, a way of social insertion, broader socio-economic insertion of those population, illegal settlement in the broader Kenyan economy. How do you look at it? Is there any background? Is there enough return of experience to comment on that?
Yeah, thank you, Olivier. And maybe let me start with something that Toyin did mention about the problem of inheriting crypto assets, because that's a real challenge. And in my perspective, that's why I was talking about solutions. Yeah. So it's going to really be difficult to mainstream the knowledge of private key and storage, safe storage of private keys. Yeah. And in my perspective, that's where probably there's going to come a service provider that provides for that. And that's, in my view, where the reason why there are low chances the government role in all this is going to go away. Most likely government is going to be at the center of this as well. They are going to have a sphere that they can have control in, and they're going to have a sphere where people just trade, of those who understand how to store their private keys, those who don't need any service providers, those who don't need any help. Yeah. But I see a future where probably government is going to be at the center of helping their populace in storage of private keys. Probably they're going to be a service provider. Let's wait in the next 5 years when values go higher, that the values that are held in crypto, we're going to see that. Then lastly, that I want to comment very shortly is with regard to regulation. I was part of the review of the regulatory sandbox in Kenya's Capital Markets Authority in 2019. And then the CEO was really reluctant to admit crypto projects into the sandbox. That has changed, however, today. And they're eager to actually admit crypto projects into the sandbox and see and understand. And one of the reasons is because the Capital Markets Authority have received bills from private members of parliament. One is the Capital Markets Amendments Bill 2022, which was trying to provide some regulations to cryptocurrency. And this is how they were trying to provide regulation. It is tax focused rather than adoption focused, where they're trying to say if you hold crypto for less than a year, then you're going to pay income tax. And if you hold it for more than a year, then you'll have to pay capital gains tax. Yeah. So you see, some of these really boil down to do our regulators really properly understand the digital currencies? And right now, by the way, in the 2023 finance bill for Kenya, we have provisions for taxing cryptocurrencies and digital assets. Yeah. So right now, there's what we call the digital asset tax. Yeah. In Kenya's Finance Act 2023, which requires for holders and traders of and service providers as well, and including NFTs, to pay tax. However, this also depends on the willingness to declare. So we still see a lot of gaps, yeah, because in my view, there's also a jump in regulating the environment before taxing it. So we want the value from it. However, it is still a totally unregulated environment in Kenya. The same thing we see in South Africa. However, South Africa have really made some milestone, and I agree with what she talks about in terms of how do we standardize this across jurisdictions? Do South Africans see cryptocurrencies the same way as Kenyans? It's because you're going to end up with a way where in Morocco it is taxed as a digital asset, in Kenya it is a security, in South Africa it is something else. Yeah, so it's going to be difficult for us to interact on a global sphere regarding this. Thank you.
Thank you, Benjamin. A few comments, Hayo? And maybe also if you get some question, maybe you raise your hand and someone is giving you a microphone so we can follow up with the question.
Okay, thank you very much. I think to me, the future of crypto is actually very bright. However, in terms of regulation, it's like a chicken and egg situation, right? For the markets to be standardized, we need the support of the regulator. However, the regulator does not fully understand crypto. You know, I was laughing when Benjamin was talking because in Nigeria also, in the Finance Act, it was stated that there's a tax on crypto and digital currency. On the other hand, you see the central bank, the Capital Market Authority, saying that it's legal to deal in crypto. So you could see that. However, something I also want us to point out is that, look, we should have at the back of our mind that we actually see the adoption of crypto in different milestones, right, in different communities. For instance, mobile money did very well. M-Pesa did very well, excellently well in Kenya. However, when the technology was brought into Nigeria, it didn't do well because there was already a particular product that is actually solving that particular solution, that's actually solving that particular problem. So we need to be careful. When you're looking at adoption of crypto, it won't actually be the same across various jurisdictions. What I think we should be looking at in different countries are, look, okay, there's this technology. what particular need can we actually use it to solve? They're talking about the international trade. I think crypto will actually be very useful in the near term, because now it seems everybody's getting tired of the dollar being the primary means of exchange. So everybody is looking for what else can we use, and I think crypto can actually solve that, right? I think unfortunately the former Libra, right, the way it was initially meant to be adopted will have actually helped a lot to serve as an alternative currency. However, before we get to that particular crypto, I believe might actually be backed by dollars, but at the same time, but I think ultimately it's going to help. Let me just stop there so that we have the time for others to
Thank you.
question.
Thank you, Ayo. Maybe to any comment, and we leave it on Scott there.
Real quick on that point is that a lot of the countries now have stable financial systems. So when you're introducing crypto to a lot of these countries, and you're not necessarily fully introducing the problems of crypto, it doesn't need to change like OPEC. The second that Tesla gets rid of $130 million and dumps their crypto, it changes the entire market and value of crypto, even more so with smaller, less stable currencies. So I think the biggest piece of this that still needs everyone's help in this room is transparency. Lindsay Lohan tweeting about or putting and promoting her cryptocurrency on TikTok is where a lot of these problems are coming. That if people are using this currency all over the world, and one or two players can dump and change the price, you have a huge destabilization problem that we just have to be honest about.
Thank you for that comment. Toyin, maybe a word? And if you have si vous avez des questions, if you have some questions.
Thank you. My emphasis will be on education, training, and capacity building, which is very, very important, and we seem to undermine. We have a lot of technicians, intellectual technicians into this space who just want to make money, not really dealing with the issue. So both government and non-government side needs to work together, and I see that happening in Nigeria already. I'm one of the members of the board of directors of the International Center for Emerging Technology at Federal University of Technology, MENA. You know, the chief blockchain and policy architect. We've introduced a master's degree program, professional master's degree program in blockchain and fintech in Nigeria. While we are doing that, luckily enough, the federal government of Nigeria, by the end of the last administration of President Muhammad Buhari, approved national blockchain policy for Nigeria. So we started that from the academic environment, while government is from the policy environment, outside that policy. And the policy is in the public domain. People can go into it. A lot of funding go into education. And by the grace of God, I'm going to be in an educational curriculum development committee in Nigeria now, where we're going to design this thing from primary to secondary to tertiary and to the public, so that people will first of all be in the know-how. Many of the problems we are complaining about is because of lack of knowledge. Because even people that are doing trading, what do they know about the trading they are doing? Your wallet, is it in the cloud? Is it physical in your phone? Is it on the token? Who is holding it? What are the issues around? You need to know. Not just I want to make money, I buy Bitcoin, I want to sell it. At the end of the day, you don't even know what happened, like what you have just said. Even when you want to buy a coin, is it convertible? If you use your dollar, your naira, or your Moroccan money to buy a coin, can you convert it to Bitcoin or other? If the answer is no, don't buy it. You should know ab initio that is fraud. Then the second thing is that when they are talking about volatility, you usually laugh. Why? Because I'm a mathematician. The entire field of stochastic process, martingale theory, are all about volatility. So I don't see when people talk about volatility, money go up and all those. That's nonsense. It's because of lack of financial literacy. When we're talking about financial derivatives, option pricings, and all those things. So people need to be properly educated, so that when you are making financial decisions, whether in investment or payment or whatever, you know what you are doing. So the emphasis is on education, adequate and appropriate education. Otherwise, people that are even fools, they will be, celebrated cyber criminals, because the people that they are committing the crime against are even their idiocy is at infinity. So people that are, for example, if I see somebody that say I'm a hacker, all those kind of stuff, if I design a network, you will not be able to hack into it, because I will have emphasized what you want to do. But when you now go there, you already a lot of 1 million people from Nigeria buy something, and ethical issues. We did not lay emphasis on ethical issues here. Somebody tell you I have a coin, within 24 hours, it will have doubled, it will have multiplied. If it happens that way, why do I need to sell it to the public? Why don't I keep it to myself and just become multimillionaire?
Thank you for bringing this in the discussion also. Maybe you want to ask a question. Is there any microphone for other question? Maybe you can shortly say who you are and say to which of the panelists you ask the question.
Hello, everyone. I'm a student at the British University in Tangier, and I have two questions. Actually, one for Mr. Olubunmi, if I'm right, and Mr. Nguyen. Okay. The first question, you have mentioned volatility and the people not being able to trade into, they're trading into the currency a lot in Nigeria, but how about volatility? How's their trust into the currency? They are using it a lot. Maybe it's better for them than fiat currency, but do they have trust in it? Can they continue to use it, or is it just a matter of temporary means to get their accommodations, daily necessities? And for Mr. Nguyen, you have mentioned that we should not be afraid of digital currency, and we should try to find regulation. Doesn't this somewhat defeat the purpose of digital currency in its first place, because it should be anonymous? And how does this work? I'm sorry. Thank you.
Thank you. Maybe a quick comment. There's 1 minute left, maybe 2 or 3, but if you want to comment.
Okay. Quick one. Like I mentioned earlier, what you realize in Nigeria that a lot of people, I think our text to what Doctor was saying earlier, a lot of people buying those currencies are just looking for assets, some things that you can invest their funds in, right, as a means of getting returns. However, you have a relatively small proportion that are using it for transaction. Just a small proportion, because think about it. I have the digital asset. If you have the digital asset, you can actually trade. But the proportion is very, 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 very small. A lot of them, and the thing is that a lot of people that actually have those assets now, a lot of them, they don't even, what they are thinking about what they should do, because they bought the coins with the expectation that the value will increase. But now that the value is actually volatile, a lot of them they're actually confused on what to do. Let's just keep that short because of time.
Thank you.
Answer to your second question, regulation by government does not defeat the purpose of digital currency, because people have a complete misunderstanding about what the purpose of digital currency was in the first place. What you're talking about is a narrative advanced by cypherpunks, who are the early Bitcoin supporters, who are people who believe that digital cash was meant to take power out of the control of government and of banks. They're the ones who advocate for anonymity in blockchain, so that you don't take KYC information when someone opens a crypto exchange account, that you don't need to comply with anti-money laundering laws. They want a network where the government cannot have control or ability to find out who traded so that you have to pay taxes on it. That is not what Bitcoin was created to be. That's what early Bitcoin and crypto supporters want it to be. And there is a growing force of people like me who say, no, if you actually want this technology to grow to massive use, you have to encourage lawful compliance. Otherwise, governments, the big institutional investors, will not support it. They cheer in the crypto world when the price skyrockets, because big institutional investors come in and buy a lot of Bitcoin. Yet those companies only do so if there's lawful compliance. So we have to get our heads out of this completely false notion that Bitcoin and digital currency was designed to be anonymous. It's not, it's pseudonymous, as Haut said, meaning it's associated with a wallet address, just like your internet activity is associated with an IP address or a unique device ID. So that's not the point of digital assets. It never was. Let's stop thinking about that way, and let's bring these worlds of the innovation supporters from blockchain and digital assets with government, enterprise, institutional investors, academia, all together to create what I like to call new wins and a better world, because my last name is Jimmy Nguyen.
Thank you all for this thorough and insightful cross-examination of crypto monies, their opportunities, all debate about that, and I think it's been very insightful for you all, and they deserve an applause, in fact. And So it was the last word, but I'm sure the discussion is going on.
Yeah, thank you. I just wanted to add quickly, because that's a very important question that you asked, and I want to make contribution to what my co-speaker have said. For example, in Nigeria, that is why I lay emphasis on education. A lot of people don't understand the difference between trading and investment. If you want to go into investment, it must be long time. And I can tell you that anybody that is informed and want to invest in cryptocurrency can do that now and leave it for a long time. Because in long time, the value will increase, whether we like it or not. Only 21 million Bitcoin will ever be produced, and that's to be used by the whole population of the world that is going to be increasing. So after this stage of volatility issues that we're continuing about, the value will go up. And once the value go up, people that invested and leave their money for a long time will definitely find it very useful. But for trading purposes, if you are also very informed, it depends on jurisdictions. For example, in Nigeria now, in the last 3 months, we've had extensive devaluation of the naira. So it means if I have my money in Bitcoin, I could sell it and get more naira without doing anything. Go and use the money and buy it in physical properties that the value will go up over time, and also use to buy some other cryptocurrency and diversify the economy. So this is very, very important. So that is where knowledge education, so that it brings that knowledge and you are dealing with the whole world. And finally, crowdfunding and crowdsourcing. The whole of Africa, why can't we have a single currency that we can have initial coin offering into? We have a fund that Africans can borrow from rather than borrow from non-African environment, and you begin to use it to build things in Africa here, tourism in Kenya, tourism in Morocco, and Africans can go here because so many things are happening that we need to see how does the cryptocurrency tie into it. Now, a lot of governments in Africa are removing visa restriction. You don't need visa to go to Kenya, effective from December 31st. Rwanda, you don't need visa to go there. Now imagine if there's an African cryptocurrency that Kenya Airways, Royal Air Maroc can say, okay, you accept it. We now see the utilization. We don't just sit down there and be saying government is talking from the supplier side, from the demand side of the equation. We, the people, not government, have to work. When we're a majority, like I gave the example of Gmail, Yahoo, and the normal emails that we have before, we see that we arrive at an equilibrium that will be good for both parties. And regulation, government must regulate to ensure that corrupt people like that guy in America, that on ethical basis makes it look as if the fault is that of blockchain technology or crypto, which is not, because we cannot get people's money and unethically give it to your other company to involve in high risk something. So legal people should deal with that person, and we should not be concerned about it. But this with the main issue, which I think that the future is very, very bad. Very, very bright, and we need to be educated properly, continuously, so that we can make the best use of this within the global community. Thank you very much.
Thank you all.